Right. So, welcome to a quick reflection of how I did read price as of this Monday because I want to do a quick analysis of what I'm going to be expecting tomorrow as of Tuesday, 25th of March, 2025. And without before even I start talking about tomorrow, I want us to do a quick reflection on what did I see and how did I even manage to take my two trades, which were both winners. So over here you can see that this gold, whereby I was looking for a short position, which I did manage to get one. And yeah, my draw on liquidity, or my target, was this previous day's low. And if we start from the weekly time frame, what I'd already maybe anticipated as we were opening this week is we had this weekly fair value gap, of which I'm expecting the market to trade into, then of which I will try to see whether we can react going higher, or we might be maybe rallying to this fair value area, and watch carefully if we might be reacting off this level, or we might be rallying towards this monthly fair value gap. And before that, we need to go through that low. And why do I need to reanalyze with what I'm seeing is we have these candle have this candle has 6 days before it closes, and we will be confirming this bullish fair value gap. I'm not really for now, I don't really expect, if this candle closes that bullish, I wouldn't be interested in waiting to see the market tap into that level. But because that candle hasn't really closed, then there I need to be very open-minded, right? Other than sticking on to one thing. But as of today, what I did see, having the market dropping and having this weekly fair value gap, to which I'm really watching to see whether the market might sting into it and then go bullish. Then before the market rallies to that level, we had this previous day's low, and also we had this immediate rebalance that currently we can see it has already been traded. But since my target was that PDL, I want to align myself, because where was my target really the PDL? Because you can see as of when was this? A Thursday, the market was bearish. Then on Friday, we really closed bearish below this candle's low. We had already traded into this bullish fair value gap. Now this bullish fair value gap isn't really that necessary to me, because it has already been traded. It has already been repriced to. And if the market will be going lower, it's not the fair value gap that will be causing the market to drop lower, but these liquidity is resting below this day. So that's why I was really anticipating to see prices dropping lower. And my context, which you can see, the immediate rebalance was already created when I was trying to look for my opportunity right then. So we had that daily immediate rebalance, which had already seen that the market had already opened, rallied, created the immediate rebalance, and rallied higher to create the high of the day and also the upper week. Then we displaced lower to that weekly immediate rebalance, and then we didn't really actually reach the PDL, but that I think gonna be reached as of tomorrow. So I drop onto the daily time frame, and at that moment in time, um, I have my journal written. So I usually do these every day. Right there, so I need to delete. Right, okay, we good now. Right, so what I'd seen as the day was starting is, as of Friday, I think this was the immediate. I need to show the immediate rebalance visibility below, right? So as of the 4 hour time frame, what we'd seen is the market had rallied higher. We had that 4 hour fair value gap, we stung into that immediate rebalance. You can see there we stung into it. Then at that moment in time, I don't usually trade if it's not the New York time window. I usually wait for the New York time window for me to look for trading opportunities. So all these two candles, I didn't really want to be interested in the market until this candle. So what had happened is the market had traded back into this fair value gap that was highlighted. Remember, it had already been traded at this with this candle that dropped. Then we consolidated a little bit on Sunday. Then as of Monday, we pushed higher. So since this fair value gap had already been traded into, then there is no need for me to consider this fair value gap because it has already been utilized, right? What next could maybe hold prices lower? What could cause the market maybe drop lower? It's the liquidities that were resting above this high that had already been traded into that fair value gap. So what we saw is a sweep of that high with this impulsive candle that closed above this fair value gap, which was not a good thing if I could have watched the market at that moment in time, right? But I didn't watch. I watched immediately as this candle was closing, and I noticed that this candle had swept the previous candles high, which to me is a two candle rejection. If the second candle rejection, if the first candle doesn't obey a key level, then we can also consider the second candle, whereby it needs to sweep the previous candle's high, which is the same as this thing. So as this a fast swing high that had already traded into fair value gap, it didn't really push. This fair value gap didn't do its job to push prices towards this low. We consolidated, and therefore we needed to see a second rejection, and the second rejection is a sweep of this high, then a drop lower, which exactly did happen. We swept these liquidities resting above, then the market displaced. So same to this one, we didn't respect this high because we didn't sweep it, we ran it. This candle closed above it, and so for the next candle, if we are bearish, we need to see a sweep of that high, the previous two candle rejection, whereby it did happen. We swept that candle's high, we dropped lower, closing below the 4-hour fair value gap. Next candle, we rallied higher, then displaced lower. We are currently forming a fair value gap, which we'll be talking about. So at that moment in time, I was watching for a reaction of this 4-hour fair value gap dropping lower. I watched this candle. I was watching this candle, the 7 a.m. candle. Nothing really much. At the next candle, we rallied back into that the high of the 4-hour fair value gap, drop lower. So as this candle next, we rallied back, and then we were dropping lower, because to me, I was waiting for fair value gaps to be confirmed. So what was happening is price at around 7, this candle 7 closed at that moment in time, then 8 closed bearish. Below you can see the 15 minutes candle, we were at around the midpoint. Then we waited for around an hour. At around 9, nothing was really showing up. Then immediately this candle closed. As this candle was printing, I dropped onto the 5 minutes time frame to actually try to see what we had there, and I noticed that we had this 5 minutes fair value gap was traded into. We had this 5 minutes fair value gap over here, had been traded into, respected, led to this formation of another 5 minutes fair value gap. And as this candle was actually printing, so I didn't wait for it to close. I wanted to see this fair value gap being formed. I entered there, then we were in profit. We retraced back, we went back into that range, but I had my stop losses at the safe place. Then off that moment in time, the market started tanking, heading to TP, and that was a nice read of price. And about my SL placement, one thing, I had it slightly above these highs, and also I considered this liquidity sweep. So I had it where we had already swept these liquidities, and if I drop to the 1 minute 5 minutes time frame, what I noticed is we had a swing high that had been formed there. So to me was a short-term swing high, which if you notice that short-term swing highs aren't really taken out because the market was really bearish. I noticed this high hadn't really taken this high. We had created the change in market structure shift. The market structure shift can notice immediately this swing high was created. This one didn't take it and the market was tanking lower, so there was no need for me to have it at that point because my RR couldn't be that nice. But yeah, that's what happened, and that position was nice. And then we had a Euro USD trade, but my entry was based off the 15 minutes time frame. But also my SL placement, I really improvised it uh, going to the lower time frame. So if we start from what I saw of the 4 hour time frame, remember I've been bearish with the strength of how candles are bearish, so I want to be bearish. But also, what was my target? What was I targeting? I was targeting that previous week's low, of which I want to see how price will react. Remember, we are in a long term. Yeah, these are my journals. Hopefully, yeah. So what we have here is we have this weekly low, which was a level I'm watching to see if price could maybe have a sweep, because we had already traded into the fair value gap. So whenever fair value gap has been traded into, it has already been mitigated. And if price needs to go back into the fair value gap, it's no longer the fair value gap that is attracting price into that level. It's the liquidity is resting in that fair value gap. So for this instance, if the market is likely to push higher off the fair value gap, then we need to be pushing higher of these weekly low, the PWL, which represents the previous week's low. So that was my first target for today. And I don't know whether I'm sleepy. It's currently at 1:46. So what I saw for EU is, remember, this was the target which was hit today. So as the market was printing, I noticed that the market had already formed an SMT, whereby on Monday we hadn't really swept the Friday's high. But if we go to GU had already swept the previous day's high. So in this case scenario, you can see we have a higher high, and for EU we have a lower high, and therefore, which means I should be trading EU compared to GU. You can notice how GU closed bullish, but EU closed bearish right there. You can see that. So it means that whenever we have a pair that creates a lower high, that's the stronger pair to be trading, and that's why I decided to go for EU other than GU. So seeing that, it was the first sign that yes, we might be expecting price to deliver to the previous week's low, and therefore I dropped onto the 4-hour time frame. And of the 4-hour time frame, what I noticed is this is the SMT, which was clear of the 4-hour time frame. If you go to the 4-hour for GU, you can notice this was the PDH, previous day high, that was swept, and we have that SMT. We had this bullish fair value gap, which to me wasn't really exciting, but I wanted to see it being disrespected. But for EU, we didn't have that, and that is another addition that I wasn't really looking for to trade GU, because we have a bullish argument. But GU didn't have any bullish fair value gap, so seeing that, waited for this candle to be closing, and then it closed kind of bearish. We were disrespecting this order block, because an order block, what we want to see is a sting into it, and then and the price reacts off that fair value gap. So if we mark up that order block, because I used it, all right, black, yeah, so that's the order block, and this candle had already traded into it and closed inside the order block. So to me, and since I have a bearish argument towards this low, then I wanted to see it being disrespected. So I dropped onto the 1-hour time frame, and at the 1-hour time frame, remember, this is the order block. What I noticed also at that moment in time is we had already traded into it at this moment. So off this 1-hour fair value gaps, we need to see market push higher to create other fair value gaps going higher above this high. But the market failed to create a higher high above this high. We consolidated, then this candle closed bearish, as this candle closed bearish, I waited for this other one at around 8, because at 9:45 we had a news event. Knowing that we are disrespecting this order block, because we are back into that order block, and also it's a fair value area, then I was to me it was likely that we could see price rally to these fair value areas low. But since also we have all these liquidities and a major liquidity pool, then I was anticipating to see this low being taken. So as I was seeing this 1 hour fair value, possible fair value gap being taken, I was asking myself, is it likely that we might see price push into these 1 hour fair value gap? So I was keen about it, and I dropped onto the 15 minutes time frame, and what I noticed is even the 30 minutes. I consider the 30? Yeah, as the 30 minutes, I was with this first fair value gap. Let me get rid of this 4-hour order block so that we may have clean charts. So we have an SMT, we have this liquidity sweep, we have a disrespect of fair value area, because it was supposed to form fair value gap, which was formed this fair value gap to lead another fair value gap above these highs. That didn't happen, and the market disrespected this bullish fair value gap, which is the first time after the liquidity sweep. Then we formed a 30-minute fair value gap. To me, I wanted to see this next candle rally higher, tap into that fair value gap, and that didn't happen. It consolidated. We confirmed that 30 minutes fair value gap, and that's why I based my trade off these 15 minutes fair value gap below this second other fair value gap, and also this 30 minutes fair value gap, because the lower fair value gap was traded into, and then the market tanked lower. So someone who had a fair value gap at this moment, because this was a breakaway gap, the market didn't really tap into it, as well as the 1 hour fair value gap, then the market tanked to my TP. So those were my two trades today, which you can see are good. Did make a few mistakes here and there, whereby to me, I don't know, I was kind of greedy with this trade. So instead of having a 1 to 2, I knew that the market, I think this was a G. Yeah, I didn't have it at a 1 to 2 exactly, maybe a 1 to 4. So the market reversed on me at this moment in time. So seeing this reversal, didn't really want, I had trailed my stops to around 1.6, 1 to 1.6 RR there. So this trade wasn't really closed at 1 to 6, but at 1 to 2, but at 1 to 6. So those are the mistakes. My trading view 2R was hit, but my MT5, I only took 1 to 6, and the most important thing is MT5. So trading view isn't really really good, and don't trust. What I'm learning is indeed people can fake the results via their trading view, but also the MT5 is suffering. So that's what I did learn from this. Same to gold. I think those were the mistakes, and what can actually, it's because of maybe, let's say, greed, seeing that the trade is moving towards my not against me, but towards my TP, and then I become maybe greedy. Yeah, if I had a 1 to 2, right, it could have been taken at that moment in time, but I had it maybe slightly below, right? Wasn't a 1 to 3, but a 1 to 2 something. So the market did that, pushed back. So as the market was pulling back, didn't really want to hold a trade for long. Nowadays it seems that I want to be in and out due to the consolidation nature of price. Then I closed my trade as it was pulling back, and also 1 to 1.5, and yeah, I closed the whole positions at a 1 to 3 if we can add them, which is not bad. And yeah, but I need also to, maybe if my MT5 TP is exactly at a given moment, then I should maintain that also at MT5. So that's what I did learn, and with that now, guys, let's clear everything, because my journal has been updated already. This is also on my journal, so we can start afresh. So what do we see, or what do I actually anticipate for tomorrow? So remember these, let me take back. there. Yeah, and get rid of the unnecessary stuffs. So this is what I have. I want to see the market be dropping to that weekly fair value gap, and then we react higher. And the first also level I will be watching the IR. What will be happening around the IR? Could we respect the IR and push higher? A good example is this scenario. We did create a fair value gap here, but we created an immediate rebalance, then we pushed high towards those highs. So are we likely to see the same? Because I know most of the individuals are expecting to see the market drop towards these fair value gap. So sometimes the market might react off an IR and then react bullish towards the target. So I will be watching what will be happening around that point, but also my main interest is I want to see that being disrespected, push deeper, then we can react higher. Of the daily time frame is we have those liquidities are being formed. We haven't really swept them. What we are having is more liquidities being formed here, because we can call them more relative equal lows, but though they aren't. And also, since we have the bullish argument that we have is we stand into that IR and we reject that higher. So if we displace below these candles low, then I will be expecting to see the market, the weekly fair value gap being traded into. But for now, we have liquidities, bearish liquidities. We have a bearish structure, which would be clear of the 4-hour time frame, but also we have a bullish argument of that IR, because we did reject higher and we did form a higher low, right? So this higher low that has been formed of the 4-hour time frame after we had tapped into that IR, right? So we need, yeah, to have the IR. And since we had already traded into the OTE levels of this price leg from the high to the low, now the newest price leg is from that high towards the low. So we have that OTE levels, and the new fair value gap that we have is this. Is that for our FVG? I don't know whether I'm sleepy. I feel my eyes are too heavy on me. All right, so we have the 4-hour FVG right there, and we have the fib levels, and this low still maintained. This load hasn't really taken that out, and maybe from the low to the high, should we use this low to the high? But yeah, it is where it is. I will maintain this low towards that high. This is the newest low. I will use that. I will use, because this is the low that has caused this rejection going higher. So from that low, I will be monitoring what will be happening around this level. So 50% is around the 50% of that fib, the 4-hour fair value gap. Yeah, no problem even if we use that low. And but the ideal one should be that the upper fair value gap, the upper low, I mean, sorry. So we have these as the OTE levels. We have indeed want to see the market rally to these. So if you are bearish, want to see the reactions of this 4-hour fair value gap going lower, and of the 1-hour time frame, I get rid of these. All right, we have it there. So what I will be watching for is how price will react to off this 4-hour fair value gap, and specifically around the OTE levels. So until tomorrow New York time window, I will be watching what price will be telling us, because I know we have fair value gaps that are yet to be traded into. So we have these fair value gaps that are yet to be traded into around this moment in time, as well as a major liquidity pool in form of maybe the New York high. So we'll be watching that to see whether the market will be reacting bearish of this specific level. So my intentions are, let's see, any 30 minutes fair value gap. Yeah, so around this moment in time, can we have something like this? So off that 4-hour fair value gap, could we have something like this, pushing prices towards the lows? And what I want to see is during the open we push higher. I think the market has already opened. If I have oh yeah, there we go. So the market usually opens for me at around 17. So these we haven't really closed around 18 there at this moment in time, that we are closing around this moment. So I want to see the market move against as it opens against the real direction, the same to what happened today, then the real movement happens. So that's what I will be watching also for. Push higher, then we continue if indeed the market is bearish. So this is the area I will be watching for price to react off of. And if we are bearish, then we need to see bearish structures of this level. But if we won't have bearish structures, then we'll just have to wait. Maybe we might be sweeping the previous day's high and then we drop lower, but I'm still watching for bearish prices until proven otherwise for now. So that's what I will be watching for gold. Let's have a quick one for GU and EU. So we can delete go to the daily time frame. What you can see, the SMT is still maintaining, and we have currently swept that major liquidity pool. And one thing that is kind of a bullish argument is we did sweep that and not run that. We didn't close below that candle slow, so we have a 2 candle rejection of this weekly fair value gap. So this is a bullish argument, which we refer to as a 2 candle rejection, whereby a candle traded into a fair value gap, and of this fair value gap we want to see prices going higher. And for the market to push higher, then we need to see the liquidity is resting above and then we push higher. So that's what I'm currently seeing. But we have still these daily fair value gaps yet to be traded into. So we have those fair value gaps to be traded into. So we need also to observe the structure of the lower time frames. So of the lower time frames, we have these previous week liquidity run, and we have formed these 4-hour FVG, of which if we are bearish, we will be watching how price reacts to that level. 4-hour FVG, and also I need to have my fib from the high to the low right there to see how the market will react around this level. And if we are not really reacting bearish and we break maybe a structure above this opening of this bearish candle, then we might want to see price pushing maybe towards these fair value gaps and maybe towards this previous week's high. But for now, I'm still maintaining a bearish argument of that 4-hour fair value gap, as well as we have these 1-hour fair value gaps resting here. So yeah, it's what we'll be watching for around this area. If we rally deeper, the deepest I want to see price react lower from is possibly this 1-hour fair value gap. If we don't show any real intentions of bearish prices of this area, then I will be bullish, maybe anticipating to see all these liquidities being taken and maybe the previous week's high. But for now, we just await. Talking of GBP USD, the same I think is for GBP USD, though we haven't really traded into this weekly fair value gap. For GBP, the weekly fair value gap hasn't really been traded into, as well as the previous week's low. I don't know who typed these. PEH, it should be previous. Damn, we're 30 minutes in already. That quick. Previous week's high. So we already have also the previous week's low that is being maintained, and for EU has already taken that the previous week's low, so we can also say a bullish SMT is being formed. And if we will be bullish, then the pair that will likely be trading will be GU, right? Because we have a higher high, right? If you are bullish, remember, we want to form higher highs, and if you are bearish, we want to form, yeah, you're right. Yes, you did answer that. There we go. So we have this weekly fair value gap, which we need to be trading into. Not really need to be trading into it, but to me, it's an ideal key level to be watching how price reacts to that. So we swept that previous day's high that led to the SMT. So I'll get these off to have the clean SMT. Come on, bro. What if it stays there? Are we cool? All right, let's have it below there. So we have this SMT that was formed. We have the previous week's low that is really yet to be traded into, and now also have this fair value gap, not really clear from the daily time frame, but with this rejection, either it's a bearish sign that we are rejecting, meaning we had fair value gaps going higher and fair value gaps going lower, so it's a bearish sign. So we have that for our bearish fair value gap that was created at that moment in time. We have lots of liquidities, so this bullish fair value gap has been disrespected, so we can have these for our bearish fair value gap there now. So we have the 4-hour bearish fair value gap, of which I will be trying to look for reversals now going lower. If that doesn't actually happen, if we don't see price reacting off this going lower, then we can anticipate to see higher prices if we displace above this 4-hour fair value gap. And if we close above this down close candle, the opening, then we will have confirmed SMT. We have a break of structure, and now what we can be targeting is this previous week's high, and this is the pair that I would really want to trade if the market will be bullish compared to EU, which has already broken structure. So that's what I will be expecting, and we need to wait until tomorrow New York session. And remember, for GU, you can see we don't have really any fair value gaps that has been created here. The market is weaker going lower, but we have formation of bullish fair value gaps going higher. So yeah, if we have, because this from the high to the low, we had already utilized the OTE levels. Now I can shift this towards this high, right? If price doesn't respect these OTE levels, now we can anticipate to see the previous week's high being taken. So my key level will be these 4-hour fair value gaps for both EU, GU, and I think as well as gold. We have the 4-hour fair value gap. Yeah, so of those levels, that's what I will be watching. If we react lower, then I will engage towards these lows, but if we don't react lower for gold, I will just be patient, but for EU and GU, I will maybe target the opposing liquidity. So that's what I'm expecting. Hopefully we get to see how it prints tomorrow. Looking forward to see the markets tomorrow. So until next time, guys, be safe. If you have any query, remember, you can just come to my Telegram channel, ask any question. Feel free, Also DM me at Rank Straight or Ranks MMXM via Instagram, and let's watch at the chat. So until next time, guys, be safe.